audit quality, and more. That's what you hear on the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance partner at Clifton Larson Allen. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are my own and not necessarily those of the NJCPA or CLA. Okay, let's get into some topics today. We don't have any new pronouncements that came out, and I wanted to go over something that I constantly reference over and over in many different episodes, and if you see any of the CPE that Frank and I do, we mention this a lot, and I'm sure a lot of people are wondering, what are they talking about? The FASB Codification. So a little bit of quick history. The FASB, the Financial Accounting Standards Board, was established in 1973, which followed the cessation of the APB, which was the successor of the ARB. So I know some of the old timers that are out there that are watching going, oh, I remember those. Those were fun ones. And the young people are like, what are you talking about? So that's pretty much been the model of the accounting guidance that's been put out since the 1950s for the most part, actually before the 50s. In 1973, the FASB came out, and from 73 up until around 2009, they issued a Statement of Financial Accounting Standards, interpretations, staff positions, technical bulletins, EITFs, which they still issue, and actually the last FASB, or Statement of Financial Accounting Standard, that came out was 168, and that was in 2009. So for all that little history that you just went through, thank you for traveling down that road with me. It was fun going through that. But in order to accumulate all the different accounting guidance out there, the FASB came up with a codification. Okay, now what it means is they took all this accounting guidance and codified it into one area, into one simple reference area that we commonly refer to as the codification. Okay, when you talk about different accounting guidance, most people you talk to is like the new lease standards that are out there. You know, my old self, when you talk about statement of cash flows, I still say FAS 95 because that came out just when I left college. Okay, but now most people you're hearing them talking about accounting guidance. They reference the codification sections. So the new leases is found under ASC Accounting Standard Codification 842. The old lease guidance is found there in their ASC 840. Revenue recognition 606. So that's why you hear a lot of us talking about these numbers consistently, and that's what it's referring to. So also one thing I didn't mention is the AICPA also has some accounting guidance, as does the SEC. That they tried to pull in here. So in September 15, 2009, the AICPA finally put out what we commonly refer to as the codification. In other words, the codified accounting guidance. But why do I keep bringing this up? The reason I keep bringing this up is a lot of practitioners out there, not just practitioners in public, but a lot of members that need to do research are always trying to find tools to find accounting guidance. Now, we're not talking about auditing, we're not talking about reviews and comps or other attestation services. I'm specifically talking about accounting guidance. Now, the one thing that we liked about it is when this codification came out, the FASB actually made available to people the information, the codification. Now, there were different levels at one time, and there's still a little bit of restrictions, but there were different levels as to what you can get based on what you paid for, or there was actually a free portion of it. And I found it great that the FASB actually made available for everybody to have this information. They could at least start their research. So and their description of the codification is, it's a single source of authoritative, non-governmental, generally accepted accounting principles. Here's the catch. For those that like to Google and then go to Wikipedia for their accounting guidance, all other accounting literature not included in the codification is non-authoritative. Okay? So I recommend that if you are trying to do accounting research, there is a search function on there, the glossary you can access, and all the other areas. I recommend that you go to their website. It's under FASB.org under the standards selection. So if you go into FASB.org, do that now, right after you get your nanocredits. Find the little section that says standards, click on it, it's the first thing that says codification, and then just peruse around there. I think it's a great tool, and I think that people should be using this. Is not an advertisement for them. This is information as it relates to accounting research. Okay, sticking with the FASB, the PCC, the Private Company Council. This is a group or a council that's put together to try and come out with guidance as it relates to private companies and help them in their reporting aspects. So they had a meeting recently and they talked about other things, but one of the things that they talked about was software costs. Now, if you've accounted for software costs in the past, you may have heard the phrase technical feasibility. And I'll just tell you right now what they kind of mentioned in their meeting. I'm just going to read it off of here, and we'll talk about it a little bit. But the council tentatively decided to pursue the single model, formerly referred to as the initial development cost model, okay? All these words that are coming out about, about that. But I like the next part, in which all direct software development costs are capitalized, okay? Listen from here on. All direct software development costs are capitalized from the point at which it is probable that the software will be completed and the software will be used to and perform the function intended until the software project is substantially complete and ready for its intended use. Whew. So I've dealt with a lot of software companies, and whenever we find out that they're developing software, or companies that develop their own software for internal use, and they either don't capitalize anything because they want to get a tax deduction, or they capitalize everything from the beginning of time. And there's usually, what I have found over the years, a very small window of what should be capitalized. Because in the past it was referred to a lot of technical feasibility. You have to develop a software until it reaches a point of technical feasibility. So you get some sort of coding done and you say, okay, this backbone, this framework can kind of work, and then we can expand and really clean it up and get it out and get it ready for market or get it ready for intended use. So it's very similar based on what they said, is that in which the direct software costs are capitalized from the point in which it is probable that the software project will be completed. So you know that this is what we've developed, this is what we're going to move forward with, and we're going to get this to a point where we can ultimately use it or get it to market. So I still find that there is this very small window. If you are a software company, if you're developing software for internal use, you should look into this and you should consider the accounting around for software costs, okay? Because as an auditor, we come in all the time and we notoriously have adjustments for that. All right, let's go to AICPA. AICPA, the Audit Quality Center. All right, now usually you have to be a member of the Audit Quality Center to get some information from them. They usually put out some good information. A lot of it relates to public company type of audits. But I do like to get it to see, because a lot of times that, as Frank and I will say, that kind of flows to the different areas, usually audits of private companies. So the Audit Quality Center, again, put out an audit quality report analysis. And what that is, some accounting firms regularly publish their own audit quality reports voluntarily. So they do a study of their own audit quality, the accounting firms, and they provide their study of their audit quality to stakeholders so that they can read up on what information and what the firm is measuring their successes or their focus in their audit area for audit quality. They observed the Audit Quality Center from reviewing, I think it was 14 different reports from different firms. So it's not a lot of firms, it's probably the bigger firms, but the smaller firms should look at these and look at the content, because it will help you guide how you're developing your organization and what you should be focusing on, because you're going to see a lot of trend in the comments that I mentioned here. They observed 100 unique qualitative disclosures and quantitative audit quality metrics. And I'm just going to read through the list of them really quick. You go, if you could get a copy of the report, if there's available to you, you'll look, there's a lot of descriptions to this, and I found a lot of it really even focus applied to us when we were Sobel and Company, applies to us when we were CLA. But the qualitative disclosures is the firm's, here are the bullets, the firm's message and commitment to stakeholders, audit methodology and execution, how is the firm focused on it and its philosophy, the people in the firm culture, qualitative management and inspections, technological innovations, and the future of the profession. Those are the qualitative disclosures. The quantitative disclosures, there's a lot of them, so I'm going to go through it quick because I'm watching the time too, is inspections, CPE and training, use of specialists. Now when they went through these metrics, they actually gave quantitative metrics along with it. Audit report issuance and restatements, how often do they do that? Independence monitoring and consultation, partner tenure and other experience factors, personnel composition by level, personnel oversight, personnel turnover, investment in technology, diversity, excess work hours, milestone completion, and in other words, how much of the job was done before year end, after year end, where the job engagement stands, staff utilization, and audit preparation and supervision. Those are just some of the 100 areas that they hit in the bullets that I mentioned. But you see, I bet you no matter the size firm that you are, this applies to you. And if you're a stakeholder, clients, investors, you'd be interested in reading that information. So if you can get your hands on the report, it's supposed to be membership, subscription oriented. I recommend you look at it because there's great information there, not a very long report. So, okay, a few closing notes. The NJCPA Convention and Expo is just about here. Come to Atlantic City on June 13th to the 16th and earn up to 20 CPE credits and get together with the fellow members. It was great last year when we finally got together again. Get the details and register at njcpa.org/events. Remember, this is the last year of the New Jersey Triennial. Make sure you fulfill your CPE requirements. Access all upcoming NJCPA events at njcpa.org/events. And if you don't know what you have as to your CPE, track your CPE at the New Jersey Society Tracker. Go into njcpa.org/CPE tracker. And finally, be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening.